Good morning traders, Mark here from the day trading room. Time is 10 to 11 in the morning London time on a Wednesday morning, and it's been a while since I have done a video blog entry. Um, what I'm doing is I'm categorizing and just trying to sort out the previous or all my previous videos. Been doing the blog now for well over a year. There's a lot of interesting videos there, but they've sort of got lost in the midst of the journal. So I'm spending a little bit of time trying to categorize those a little bit better, so I can go back and review. So if there's something specific to the ticks that you want to look at, or I want to look at, then I'll go back and hopefully be able to categorize those. Hopefully they will be categorized, should I say, based on video topics. So that's what I'm doing at the moment. So any site time is generally spent on that. But and actually at the moment in the market, setups have been pretty much usual things. You know, the continuations, the pauses. Not so many counter trend plays at the moment for me. Mostly waiting for the continuation. Not to say there aren't any counter trend plays. There's some very nice ones, but I've been waiting for more of a continuation setups, and that's what I wanted to talk about today. And a bit of a follow on from the last video, which we're talking about breakouts and positioning for breakouts. I just want to compare. First of all, if we look at yesterday's market action, if you look at yesterday's market action here, very range bound, not much volume at all, struggling to break through prior day's high. So really, continuation trades are a no-no. Okay, if you look at the chart now, you can probably see the odd one or two that would have worked, but why fight the trend? Although no, it's not actually a trend, but why fight the market rhythm, should I say? The market rhythm is probing highs, faking out, pushing lower, and so you've either got to be comfortable with trading that type and flip to that, or step back. And for me, because I've been taking quite a lot of continuation plays recently, I want to stay on top of my game with those. They're working very well for me. I step back when it's a range day and look for the next time we get a continuation type move. And this is so pretty much yesterday. Yesterday I did no trades at all, not even one trade, and I haven't done that for a while. Really just waiting for my preferred play at the moment, which is this. And actually the day before, this is one of the best ones. Tuesday as well of last week was a good one, and I'll go on through that in a bit. But I want to talk through the sort of mindset and setup of this play. About 8:30, 8:45 London time, so 15 minutes before the close, 30 minutes to 15 minutes before the close. This is becoming more and more frequent now. Buying or selling programs kicking in and moving the market quite aggressively, 100 points or so. We're looking at the Dow, and this is what we got yesterday. Excuse me, not yesterday, Monday. We pushed up aggressively, and this is where I like this setup. I've talked about this setup before. I'll just run through it again for clarity. The drive, the pullback, the first pullback, and the second drive. And now this follows on a little bit from my breakout video in that the high was there. This was the last high. This dark grey here I've put. It was the high of the day. And you see we had some good volume coming in here. Okay, the volume is not great actually looking at it. It's the candles are cleaner candles. Look at these sort of candles here. I call these dirty candles. You've got red, green, wicks, tails, a lot of indecision. Whereas you look at these three candles here, okay, we've got small wicks and small tails, but generally the movement is in one direction. You can look at that just by sight. You can see three good candles in the same direction, strength. Okay, so when I see that, and I see also nicely to see some confirming ticks here, some nice high tick readings coming in, and more importantly, when the ticks are pulling back and they're pulling back to around the zero level, I always say pull back to zero, but you know, sometimes it's not that precise, guys. You've got to give it a little bit of room either way. Sometimes it might not make it very strong, sometimes it might overshoot, but you want to see the response of the ticks as they get to there. And so for me, that's the buy entry there. Scaling out as we approach the high, but as I talked about in the last video, you're positioned then for the break. It looks very strong. There's not much time to go, which is even better. More fuel for the fire. A lot of shorts panicking, a lot of shorts covering. You want to make those guys pay up, and so there's no reason to close the trade while that panic is on, while that upside drive is there. If you're positioned long, you've taken some of the risk off as we approach that high in case it's turning around. But really everything was pointing to this continuing right into the close, and that's exactly what we got. And even here, when you got this spike up to here, again it was hold, just hold. There's big strength here, volume's picking up. The ticks are, anytime they dip below zero, they're pushing straight back up. You know, you're expecting, you're just watching that strength staying there. Dips, any dips are bought, any dips are bought, any dips are bought. You know, the second the ticks go low and stay low, that's when you ditch. That's when you get out of the position. But while the ticks are on your side, while the strength's on your side, while any dips in prices are being bought, then let the trade pay you. You know, you're in the good trade. Let it pay you. So that was yeah, a good little trade. And actually, I'm going to skip now. I want to go back and talk about Tuesday of last week. Is very similar. And again, got on that really well. A little bit late, a little slightly. You can see the slight variation. That's why I want to talk about it side by side. Look at the variation in this trade. The variation is that we were down on the day here. Now this was an absolute monster drive. A lot of difference in terms of movement, but same pattern, same pattern. You know, we started to rally up from around here. Again, something's kicking off at this 8:15 time. But anyway, important thing to note with this again to confirm strength is look at the ticks again. They are barely going below minus 500 before popping straight back up. Now we didn't get any mega plus 1,000 readings just yet, but as soon as we did, and as soon as the ticks, you notice how the ticks almost did this. I don't know if I can draw this, but let's assume they're the ticks there. You got the range of ticks, assuming this is this, by the way. Okay, you got the range of ticks there. Then when they stepped into another gear, they knocked it up a gear. Then they start doing this. You see that you get the range there, which is what happened here pretty much. The range of the ticks moves up a notch. Difficult to describe, but I think you can just about make that out what I'm trying to explain there. And then we're getting consistent high tick readings. That is much more aggressive buying, much more panic, much more greed, fear, whichever way you want to look at it. And extra fuel to the fire is the fact that we've been down all day, so a lot of shorts are very comfortable. We drifted down, and then bang, in we came in, huge volume. But once we'd filled the gap, there's a lot of stalling here, so it wasn't very good. But once we filled the gap, and then we'd accelerated up higher, paused. This is again the continuation trade. Now we've taken out all the highs. We haven't got much time left. You've got to think, put yourself in the position of all these people. Anyone short now is not liking this one bit. They've been comfortable all day, and now they're thinking, hang on, we haven't got long to go, and the market is rallying aggressively. So forget about how far it's gone, forget about levels, forget about your moving averages, whatever you're using, whatever indicators you choose to use on your chart. If you do that, and look at just pure price action. The market is driven by human emotion. There are algorithms in there, excuse me, but they have to be programmed by humans, and it's all the same nature. You might have slight variations, you might have slight differences, but when the market is moving against a position, if someone's short, it's moving against you. Whether you're a computer day trading and you've got someone's programmed you to say if it's moving away, then you need to get out of that position, or if you're a person, actual human behind the button, and you're stuck, then you want to exit. It's the same thing, same panic. Some people say it's the leveraged ETFs doing the adjustments. Whatever it is, we don't really care. Why should we care? All we want to look at is price action. So price action here was saying, look, this is very strong. We've come a long way. We have trap shorts. Look at the pullbacks, hardly any at all, even that flag there. But then when we took off here, we've got this very solid green candles, really good shove. That's caught a lot of people out, and that's the 100-point drive. It's a 100-point drive. Yes, 100-point drive in 4 minutes. Very aggressive. You see that sort of thing. Number one, the first thing you want to say is do not fade it. Do not fade it. You might be lucky and catch a top and a drive down, but you are really just literally stabbing in the dark at that sort of play late in the day, taking out after being heavily down on the day. Aggressive rally, taking out highs, really high tick reading, volume coming in. The very least, you do not want to be shorting that. Do not want to be shorting that. And then the next thing is looking for the long entry. This is a great setup. This is the sort of setup you want. You've got fuel for the fire in every single direction. Ticks, volume, late in the day, uh, ticks again, high ticks there, ticks holding, not going into low territory. Good price patterns, everything is fitting nicely. Very shallow pullback, couple of minute pullback. You know, I'm all over those sort of trades. That is the trade that I like to see. Perfect setup for me at the moment. Continuation play at its finest. You know, you've got people trapped. You've got time of day restricting people's orders, so they've got to get them done quickly. Loads of great stuff on your side. One of the trades that you've got to go in, and if it's part of your plan to go into those and to take your full size, then and as it is for mine, because that's just really a setup that I absolutely love, then I'm going to be extra aggressive. But so that was Tuesday, and then you can, comparing that to what I just talked about earlier on, not yesterday, day before yesterday. Similar thing, but again, late in the day, aggressive move one way or the other, slightly different, not quite as aggressive, but same pattern. Waiting for those clean bars to come in, waiting for the pause, waiting for the ticks to confirm. You had a couple of opportunities here if you weren't even in early, but I was in a bit earlier on this because I was looking for the break, but I didn't want to play the break. As I said in a previous video, don't want to play the break, rather scale out and hold a good core for a last blast up. And actually that was good for a 60 point run on that. Really nice trade that. And you just never know how far these run, as Tuesday showed. That was very aggressive move, very good strength into that move. But then compare that very quickly as to yesterday's trade. Choppy, very few opportunities for that sort of trade, and so I don't take a trade. Not to say there aren't opportunities, but if you can switch easily from continuation to your counter trend, great. If you can't, you prefer to stick with one, as I do for a while, and then I tend to drift back. If the market goes into a phase of a couple of weeks of counter trend fades, and I'll do that, fine. But I prefer counter trend flushes, exhaustions, rather than just small probes. But finally, before we call it a day on this video, I wanted to talk about this here, which very nearly caught me out, guys. Very nearly caught me out. You know me. I do not mind admitting when I get things wrong, because that is trading. You're never ever going to get things right all the time, and quite often take stops, bad trades. That's always going to happen to you. Always going to happen to you. This one I got away with, but I was so close to taking this trade and actually stepping back on it. I'll tell you what. Actually happened. I run it through as I was looking at it. We'd made a higher low around about here. We've been down on the day quite heavily, about 150 I think down on the day. I made a high low, but we were drifting here. But the fact that we couldn't push the lows, really, I know, hindsight, look at this. I'm telling you this story. I'm looking at this thinking, what the hell am I thinking? Because the ticks very rarely lie, very rarely lie. But anyway, ticks are very low. But I'm looking at the price here. I'm thinking, okay, very choppy. Looking for one more opportunity. The fact that this was so late, this all happened, skewed me slightly. Not making excuses for the bad judgment, but that's what I'm sort of saying. Often you'll get on a aggressive down move. I'll cover this very quickly. Aggressive down move. We used to get in the old bear markets. This was a lovely little play. Really aggression down into lunchtime. You get a bit of chop, okay, and then you get a counter trend drift up to about 7:15. Sorry, 8:15 London time. Which is about 45 minutes before the close, and it would just take out some highs. It would just look like it was spiking up, and then you get a nice 30 minute just hammering into that would be the classic bear market day that we got so many times in the bear markets of years ago. They were great to trade. But anyway, so I'd always keep an eye out for that. And it's a classic setup. It's a setup you've got to keep an eye out for. So we had a good downtrend day after trying to probe higher, so it's looking nice and weak, but it's a bit of two-way trade. It's not a clear run. The open, we had driven up quite aggressively from the open, a good 100 points. But anyway, going back to the actual setup, push down, started to hold here. Um, I almost feel embarrassed in hindsight talking about the way I was looking at this. But hey, hindsight's a very different, very different thing to what happened at the time. Anyway, and I've talked about this before about the probe up higher, but for some reason I very nearly bought that. Very nearly bought this pullback here, which would have absolutely just slammed me. But tape reading saved me at the last minute. But why did I buy that? Because we hadn't pushed so low, we'd started to push higher, and it was coming late in the day. At 8 o'clock here, I'd expected that. That's okay, that's fine. These probes here are fine. Pushing lower, I'd now expected to take out lows here. Okay, 8:30, 30 minutes to go before the close. I'm expecting pushes to go through to lows, and when they don't, I'm looking for the other trade. And when it didn't, we've got 30 minutes to go, and we started to show a bit of aggression here, pushing up. I know the ticks are great, yes, I can hear what you're saying, but at the time, looking okay, looking fine, starting to push up. This looks great. I'm thinking, oh well, there's a lot of trap shorts here. We could end up at least tagging this VWAP. Price action looked great, but look, the ticks really, in the scheme of things, they're only 800. If it's genuine buying, the ticks will change in a second. They're nothing to do with price. They're to do with how many trades are being conducted on the offer or on the bid. So they can go from being very negative to very positive quite quickly. All it takes is a buy algorithm or a sell algorithm to change that sentiment. So for those not to go really aggressive to plus 1,000, really, or to really, the key to reading ticks here, and this is partly what stopped me as well as tape reading from taking this trade, and I was so close to taking the trade. The fact that when they dipped lower, they stayed lower. On that bar there, that key bar there, and that key bar there, which still could be a pullback. We've broken out of that high there. Let's get the drawing pen out, a bit more clarity. We've broken out the high there. We're pulling back up to around here is still valid. Anywhere along here is still valid for a push up to there. That's still okay. But really, if you look at the ticks, once they'd been positive for a couple of bars, they didn't want to go back positive again, and that was the tell. That was the tell, along with the tape reader. That was a sucker. That was a sucker play. That was trapping in the bulls, and I was nearly one of them. I do not mind admitting it. For whatever reason, I took my eye off the game. I wasn't reading things clearly, correctly, and it was only watching that tape and watching that tick when I was about to try and time my buy entry, ironically enough. And this is where reading the price action can save your skin. Trying to time that buy entry, I thought, hang on, just does not look right. This does not look right. Just kept going and going, and I'm waiting for the pause to buy, and there's no pause, and the ticks are going lower. And at that point, I'm thinking, actually, you know what? I can see this for what it is now. It's a proper bull trap. They have properly suckered in some fellas here at this one, and actually realizing that and thinking that I was nearly one of those guys. It's got to be a short. It's got to be a short. And this is the short here. The pullback, really aggressive, nice low tick reading. Not long to go, so you only can't hang around on it. A couple of minutes at the most. It was only good for 25, 35 points, but great little play when you realise what's actually happened. The fake out sucked a few people in, and just that aggressive reversal, all those guys buying on there are just trapped. As it came down, there's the pullback, and they're just sitting there hoping it's going to push back up the last few minutes. It doesn't, and then that's the fuel for the fire for the drive lower. But yeah, close one, and that's probably a good thing to mention, because what really is important is looking at the whole picture. What's the position of the market? Very down on the day. How long we got left? Not long. Look at the tick. The ticks are telling you everything you need to know very often. And really just taking a step back and seeing who's trapped and actually I thought it was shorts that were trapped, but it just shows you also how the things can change in an instant, and how you've got to be on the ball and you've got to be flexible as well. And even though obviously I didn't take the trade there on the short, which would have been perfect if I'd been positioned for that, that'd have been lovely, recognised what happened, waited for my entry, not going to chase. There's a little pullback, fine, I'll take that. I haven't got long to go, so I'm not going to hang around with it. It's an all in, all out trade. But just taking that and actually getting something from what could have been a disastrous full stop out play. So anyway, there's a couple of trade ideas, a couple of thoughts on the market, a couple of observations is the word I'm looking for. Observations of what's happening at the moment and how I'm seeing things. So we'll see what happens this evening with the FOMC minutes. So take care, guys. As always, manage risk. If I'd got caught in that trade there, I would have taken a stop. That's the key. Managing risk keeps you back in the game. Keep that emotional capital in place, and keep the money, and keep the profits in the account in place. Keep the capital in the account in place. And the way of doing that is to manage risk. Keep that risk managed. Just imagine very quickly if I had bought there and I hadn't used a stop. You're talking 150 point loss if I'd held that right until the close. Just in literally whatever that is, 10 minutes, 11 minutes. That just shows you how you can be caught if you're reading it incorrectly. That's one thing, but if you're reading it incorrectly and not managing risk, and it takes a perfect storm, and you could just be wiped out. I know 150 points may not wipe you out, but it's going to do some serious damage to your account. So if I had taken that, I'd have been stopped out, full stop, and there's no real harm done. But actually, let's look on Tuesday. Look at the huge rally we had on Tuesday. Just think if you're shorting here and you hadn't managed your risk and you're caught like a deer in headlights, which I know people were. I know they were, because human nature doesn't change. People refuse to be wrong. People refuse to take losses. People refuse to look at the next trade and think, hey, I've analysed that well. I've taken the trade. It's not right. It's not working. It's reached my maximum risk level that I've already set out in my trading plan. I'm out. Anyway, take care, guys. I shall be back with another video probably next week. As I say, I'm trying to sort out all the videos that are on the blog and put them into the directory, and maybe make some few changes to make that a little bit easier to navigate. But always still here to answer your emails. Any questions, please email me, mark@daytradingroom.com.